Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at how, or a quick reminder anyway, because I have talked about this before and I do regularly talk about this, about how to implement trend channels or just trend lines in general into your trading. So I've got a really nice example at the moment, dollar yen. Kind of why I wanted to talk about this in today's video, because it's just such a good example. Since pretty much November, when we had this big break lower in dollar yen, on back then it was the downside US inflation surprise that would cause this big 3% or 3.7% drop on the 10th of November. Then we had this other big drop on the 20th of December, which was a hawkish surprise from the Bank of Japan, who changed unexpectedly their yield curve control policy. But pretty much the fundamental trend that's been driving this recently has been US inflation showing signs of falling back to the Fed's 2% inflation target much faster than expected. The US economy also showing signs of weakness, which has sort of contributed to widespread weakness in the US dollar. And at the same time, traders upping their bets that the Bank of Japan does depart from its ultra accommodative easing policy that's basically been in play for like a decade. So, I mean, this is the fundamental reasons why we've had this big break below the 200-day moving average, why every time we rally back towards the 21-day moving average, we get sold off again. And, you know, for now, because the US economic data certainly continues to be pointing in a direction of weakening, I do expect this trend line to continue. But nonetheless, we are seeing a bit of a rally in dollar yen. So how would you trade this? Well, potentially, this isn't investment advice or trade advice. You've got to do your own research. But potentially, when you start getting to a higher area, which is testing the top of this downtrend, testing the 21-day moving average, you might want to think about potentially layering into some short positions. That's what I'm going to be looking at. To be honest, the golden opportunity, which I absolutely loved, pretty sure I talked about at the time, was a couple of weeks ago when we rallied back up to this resistance area just under 135. We tested that. We broke very minorly above the 21-day moving average. We hit the downtrend, and that worked perfectly. Now, often you don't get the same trade working out twice perfectly, but it's something to keep an eye on. And of course, you know, if we do get a shift in the market's narrative, because we do still have the Fed trying to sound hawkish, we could get a bit of an upside break. You know, a break above the 21-day moving average and this trend line would probably trigger a retest of this support area here and the 50-day moving average. Do I see a lasting rally, though, back to the highs of October 2022? Absolutely not. Not with the US inflation coming down like it is and the US economy heading towards recession, the Bank of Japan heading towards higher interest rates. The Fed, you know, they are going to raise interest rates more in the months ahead, but it looks like the outlook for the end of 2023 and 2024, the rate outlook is softening in the longer term anyway. So, you know, if anything, it's just going to be a short-term rally. But anyway, yeah, guys, I won't go on too much about dollar yen. Hope you enjoyed the video. Hope it all shed some light on how to implement these trend lines into your trading. And I will see you in the next one.